Stop chasing. Listen, every new trader goes through this emotional cycle. All right. I'm going to walk you through the emotional cycle that every new trader goes through. That if they don't get through it, they more than likely will either give up trading or not be a successful trader. Now, here's the thing. In this video, I'm going to walk you through that and also show you how you can get over it so that you can be a successful trader. You know how people are like, oh, 95% of traders don't make money? Why is that? It's because, first of all, anybody can trade. And then, second of all, the people that are in this game are not practicing the psychological strategies. They're more focused on the technicals, right? They're not understanding how much a part of the trading game that they are as individuals. Now, we're all humans. We all have the same mind for the most part, right? Which is why trading psychology is so key. The reason that we're able to predictably take trades and take profits in the Prosperity Collective is because we understand that not all trades are our trade. Now, if you're experiencing this emotional roller coaster as a new trader, don't feel bad. It is normal. Okay. It is something that happens when you're conditioning your mind to start thinking like a trader. I got you. All right. I'm going to show you what you need to do to get out of that cycle so that you're not constantly giving your money right back to the market. All right. Let's get into it. But before I do that, hit the like button, hit the subscribe button. You're not going to regret it. All right. Let's get into it. So here is the 5-step emotional cycle that we go through. It's confidence, excitement, fear, then panic, and then ultimately regret. All right. This is the 5-step cycle that all new traders experience. And when they go through that cycle and they're not aware of it, they get caught up in the emotions. They get caught up in what's taking place, and it ultimately leads to making a bad decision. I know you've experienced it. I know you watching it like he talking to me right now. Yes, I am talking directly to you. All right, I'm talking to you because I'm talking to myself. Once upon a time, I was in the same position that you were in, giving my money back to the market, feeling good at first, but then at the end of a trade being like, I don't even know if I can really trade like that. I don't know if I can really, I don't think I'm as good as I think I am, because it'll work out sometimes and then it'll not work out and it'll not work out. And now I'm just like, all right, I don't know. You see what I'm saying? I've been there. All right. We're about to unlock this. You're not going to have to worry about this anymore. All right. Let's get into it. Now, what's happening is that you're taking emotional trades. You're taking trades based off of emotion. And if you don't take the trade based off of emotion, you are making a decision while you're in the trade based off of emotion. Here's the thing about trading. It is a psychological game, like I said, y'all. Technicals is one thing, but the most fierce traders, the most profitable traders, they got their mind right. They're doing things off the chart to make sure that they're keeping a sharp mind, keeping a very solid discipline about themselves, right? And there are things that you can do to train those that we'll get to in a little bit. But here's the reality of trading. I can take a trade right now and you can take a trade right now, and we can get out with 2 very different results. This happens all the time. You take the right trade, and then something happens in that trade, and then you end up not being profitable. I've seen this in the group sometimes. I've seen this when I've been trying to help other people trade. I'll get in the trade. I'm like, this is it. And I'll get in and I'll take profit at the right time. And somebody might have stayed in too long, or they might have started doubting themselves too much too early and got out on a little bit of drawdown, still holding market structure, but emotionally they didn't like the feeling of being down. Okay? We're going to start to navigate around these emotions. We're gonna learn how to supersede these emotions, become superhuman, so that we can lock in these profits. All right? All right. So stage 1, confidence, right? You see the setup, you take the setup. You're feeling good. You optimistic, anticipatory, right? You're talking to yourself like, yeah, I'm that guy. I'm that. You know what I mean? You're feeling really good about the trade, right? You waited for it, right? You saw it, and you according to what you know about the technical analysis, you entered, right? So you're feeling good, but right, things start to shift a little bit, and that takes you to stage two, which is early validation. All right, this is when the stock goes in your direction a little bit, right? And now you really starting to feel yourself, and you feel even smarter of a trader in that moment. And sometimes you might even in this moment be like, you know what, I'm gonna add contracts right here because you are sure that things are gonna break out right here, right? So you feeling good, you took the trade, and then like I said, coming to stage two, and you got that early validation, and you feel like you can almost just walk away from your laptop. Matter of fact, some of y'all do walk away from your laptop, and then you come back to something a little different. Now stage three hits. You're in the trade, you got the early validation, but now you're starting to pull back a little. Oh, and you also might have added some contracts during that early validation. So it starts to pull back a little bit. So now you got a little bit more money in the game, and doubt is starting to creep in. All right? You get a little bit of drawdown. You start questioning yourself like, damn, did I get in too early? Should I have waited a little bit? Like now you're starting to freak out just a little bit. And right here is where a lot of people jump ship. Right? A lot of people jump ship right here because something started out in their favor. It confirmed a little bit, right? Got the early push forward in that direction, and then it pulls back. And everybody's like, you see a little bit of drawdown. You might be down maybe like 10 to 15% in this particular, this particular stage, right? You close the trade out, you're done. But it might have still been holding its structure, but you started to get a little antsy, right? Now, this antsiness is typically because, again, you lack the patience, or you might just have too much money in on your contracts too soon. Don't worry, we'll come back around to how you can address this. All right, let's go to stage four. Now, stage four is kind of like the stage two where you got the early validation to the direction you were going in. Stage four is now you're starting to get a little bit of that validation to the opposite, right? It's starting to confirm that it could wind up coming a little bit lower. And now you're like, oh my God. Now you're faced with a decision like, if this comes any lower, like this could really be bad, right? Again, the reason you're feeling like this is because lack of patience, and you spent too much money too soon. See, when we get into trades, we don't have to put all of the money in that trade, right? There's something called scaling in that allows us to get a little bit of skin in the game, right? We might buy one or two contracts. It depends on, what your capital's like and how many contracts you ultimately like to have on for your full size. But we don't have to jump in with our full amount of money. This is going to keep us protected as things start to go down. So when we go into that doubt and fear cycle, that doubt and fear emotional cycle, we are able to maintain our sanity and trust the process and trust the structure of what we see on the charts. Okay? It's really hard to trust the structure when you're already in the trade and you're down way more than you would like to be down. Now, like I said, it's easier to be patient outside of a trade than it is to be when you're in the trade. It's also easier to be patient when you have less money on the line. Let's just be real. Okay? I know we talk percentages over dollar amounts, but at the same time, while that is true, you do see the dollar amount. You do see that P&L. All right? So when you're over leveraged, you're going to get taken out during the fear and doubt stages of this trader's emotional cycle. Okay? I'm telling you, this is the reason why. All right? So when you have a setup that you like and you're feeling confident, always understand that there is something called a sweep that can take place where your entry might, your entry might get eaten up, or even it might flirt with where your stop loss is, right? But because you only got into a few contracts or maybe one contract or a low amount of contracts, you have a little bit of time, right? So when it pulls back, this may actually be the perfect opportunity for you to add on and average down into your size. And now you don't have that far to go to get to profitability. I'm not saying do it blindly. We still have to wait for confirmations and reversal signals and stuff like that. Because when we get some sort of drawdown while we're in the play, again, it could be worse. Your fear and your doubt could be right? But once we get a break of the structure, right? Once the structure that we allocated or that we initially said gets broken, that's when you would get out of your trade. But as long as it's holding, you're literally letting fear and doubt take you out of your play too soon. Once you've let that fear take over, you panic sell. You get out way too soon. You added contracts early instead of when it came down and held the support, right? Or held the resistance, depending on what direction you're going in. All right, you panic sold, you got out, you lost money, right? Meanwhile, someone like myself that called the play, or somebody else that might have taken the play at the same time, they're still in it. They saw that it held structure, they added to it. Now, not only are they making profit sooner, but just to hold it to the original target that it was going to go to when they initially entered, now they're making even more money because their average is lower. So it goes to that target, you wind up making more than you even anticipated in the beginning. This is how the psychology can lead to you losing money on a play where you could have made more than you expected. Okay? The doubt, the fear, it leads to a panic sell. Understand, never over leverage. It's better to under leverage and make adjustments in the trade than it is to go all in on the trade as soon as you think it's a good setup. Okay? Now, when something is moving, right, it's harder to catch. When something reverses and slows down, it's much easier, right? So as long as we're holding that structure, right, as long as we're not, like dropping at a rapid pace, it's like, okay, we can go ahead and add to this. If you had one contract and added three and you might have been down 15%, you might only be down like 2% now, meaning that you don't even got to go back to where it fell from to even get into profit. That's how beautiful averaging down is. Never average down blindly. Again, it has to hold the structure. If you're trading the breakout of a bull flag, a great example would be, okay, it might be coming back to retest the bull flag. It retesting the bull flag after it broke out might have you down 10 to 15%. If you see another reversal appear on a lower time frame off the retest of that bull flag or the retest of any level that you are taking the play off of, you add to it, right? Now you have a shorter distance to go. You make bigger money, all right? If you got 1,000 to invest, maybe put the first 300 in for the initial contract, all right? Get that initial one, watch the price action, watch to see how it's moving, and then from there, you can make a decision about if you're going to add. Now, if it breaks out with volume, yeah, you can add, and you don't have to worry about averaging now. Yeah, you can add. But if you see the price action is starting to like flicker and reject at certain levels, let it come down, let it draw back down, and then allow it to reverse and then fail that downside or fail the upside. Like I said, whatever direction you're going, allow it to fail off of that level. Once it does that, that's when you add, take it back in that direction. All right, I'm telling you, this is going to save you so much time, money, and energy. All right, I want you to understand you're not alone. We all go through this. We've all experienced this. But what a experienced trader and a professional and profitable trader is going to do is to control their emotions and stay in the trades that they saw with setups on, right? They're going to stay in the trades that they saw setups on. All right. If your setup gets broken, that's your reason to get out. But if your setup is still there, but you just happen to be down a little bit, patience is the reason that you're not profiting. Discipline is the reason you're not profiting, right? All right, so I want y'all to consider this, right? Go back and watch this video again. If you have any questions about entries and stuff like that, y'all know y'all can always leave the comments, in the comment section, right? The questions or whatever you might have in the comment section, I'll get back to you. My biggest thing is getting you guys to understand that there is an emotional roller coaster that you experience. This is the reason that trading takes up so much energy sometimes, because your emotions are literally going like this. It's like, yes, I'm feeling good. Oh no, And sometimes this can deplete you of energy and make you have a bad day, especially when that emotional roller coaster led to a loss. Tell me if I'm lying. Tell me if I'm lying. You ever lost so bad that you went and just had a bad day? We do not want you to do that. That's why it's important to master your emotions, all right? Practice off the charts, patience. Do this. Go buy something that you really want. It could be food. It could be something that you want to experience. Put it right in front of you and don't use it. Don't engage with it. Don't touch it. Don't eat it. Whatever it may be, something that you really want. And go the whole trading week without doing that, right? Follow your rules for trading, have some success in the market, and then reward yourself with that thing later. But you cannot go early in on that, right? You can't. This is going to teach you patience, right? Think about, I like vegan chocolate chip cookies. If I smack a vegan chocolate chip cookie right here on the island, right? At some point, I'm gonna be looking at that joint like, I don't know. I don't know, right? But that discipline is going to allow me to walk past it 100 times, even though I got that urge. You need that kind of a skill set when trading. The technical part is not very difficult to learn, but you being the master of yourself, that's a little more difficult, right? But you can do it. And the more that you practice it, the more natural it will become to you. Today in the market, we hit NVIDIA for 20-something%. Some people got 50%. IWM, the same thing, 50+%. And we waited the entire day to go ahead and, well, not the entire day, but the entire time that we were on live to go ahead and take that trade. Hit both of them, all right? This is what patience looks like, all right? Start practicing it off the court so that when you get on the court or on the charts, you are able to thrive. All right, I believe in y'all. I want to see y'all win. Remember, it's always love over here. If you're looking for a trading family, man, the Prosperity Collective is the way. The link is in the description of all of my videos. Check one of them out and then click the link and make the decision to join the family. We can't wait to have you. We get profits on a consistent basis, whether it's the swing trades or the intraday trades or even long-term equities. Okay, we got you covered from top to bottom. We got a free 9-hour course that is constantly growing because we don't believe in static education. We don't believe in, just this one thing is going to be good forever. We're constantly improving and evolving our systems and our approach to the market, which is why we are some of the most profitable in the industry. Just go look at the track record, right? Go look at the stats. The proof is in the pudding. Go read the testimonials. All right. Again, it's always love over here. Remember, invest smart so you can live free. I'll see you in the next one.